Happy New Year, Bowtie Nation. Joseph Hogue here, making 2025 the year of your financial freedom. With this video, the 7 stocks and strategies for passive income, you're going to be able to create that cash flow every month to pay your bills. Now, I guess as a disclaimer, don't think we're going to be able to just fart this money into existence. I'm sorry, it is not that easy. What I will do is show you how to create that path. Make it so you start collecting that cash flow immediately while building on it until you're living off your investments. Let's get started with a turnaround dividend stock I'm watching. Innovative Industrial Properties, ticker IIPR. But stick around because I'm starting with the easier income sources before revealing the really high cash flow ideas later. IIPR is unique among real estate investment trusts or REITs in that it leases to companies in the regulated cannabis industry. The company has stepped in to meet the industry's limited bank funding to supply real estate for grow and retail operations. IIPR owns 111 properties with 30 tenants across 19 states, and while cannabis-related stocks have fallen out of favor, I consider IIPR more of a real estate play than with marijuana. Shares here did take a big hit post-election when Florida voted down to legalize marijuana, but that trend to legalization is still intact. The stock took another nosedive over the last couple of weeks when the company reported its tenant, PharmaCann, had defaulted on 6 of its 11 leases for December. Now, PharmaCann does account for about 17% of IIPR revenue, and cash flow will be more uncertain over the next few months, but why I think this makes for a great turnaround cash flow story is the industrial and retail properties owned by the company can always be reworked to serve other industries, so it really doesn't make sense that the stock has fallen off so bad as it has, and shares trade for an attractive valuation along with the 10% dividend yield. Now scrolling through the dividend payments, it is immediately clear that this is not a monthly dividend stock, but what I'm going to show you later is how to turn this into monthly cash flow. What IIPR is though, is a stock that's going to put more cash in your pocket. It's grown that dividend by 90% over the last 5 years, nearly 14% a year more cash going to investors. And it's that combination of low valuation plus an increasing cash flow is what we're looking for in these income investments. Something that's going to beat inflation with how much money it puts in your pocket, but also with a return kicker to grow your portfolio. This next investment isn't a stock, but a strategy with rental real estate income. But anyone that ever tried managing their own rentals knows it can be more headache than it's worth. That's why I now invest most of my real estate portfolio through funds like on the Arrived Homes platform. The platform packages rental real estate as LLCs, so you get that direct investment for less than $100 and without the massive down payment or management headaches you get from rentals. Through the Arrived platform, you can invest in single-family rentals with all the information you need to make that decision. The platform also has vacation rental properties for investment with a little more risk but also higher return, and then the single-family fund for diversification across 22 markets and 48 properties, or a credit fund with an 8.1% annualized yield. The properties are all professionally managed and the rental income is passed through as dividends to investors. In fact, Arrived just switched to a monthly dividend model, so you're earning from 3 to 8% annualized and getting that cash flow every month, along with the price appreciation when a property is sold. Getting started takes less than 5 minutes, but I know it's not as simple as just buying a stock, so I'm going to leave a link to Arrived in the description below. It's one of my favorite investments right now for that stable cash flow yield without the hassles of owning my own properties. And one thing though, the homes available for investment do sell out fast, so make sure you click through and get on the notification list. Next on our passive income list is Trinity Capital, ticker TRIN, a business development corporation or BDC offering a 14% dividend yield on your money. BDCs are great for that passive income cash flow because of a special tax break they get by passing almost all of their profits on to investors. These companies lend to small and mid-sized businesses, with some like Trinity also taking an equity stake in venture-backed startups. Trinity Capital has over $2 billion in assets under management, money it lends out at high-yield short-term rates along with its equity position so it can generate that cash flow to pay the dividend. Now you'll notice on most BDCs, most or all of the return is going to be in that dividend yield. Shares are up just 3.7% over the last 5 years and haven't really deviated much from that tight price range, but that dividend has nearly doubled, growing from 28 cents a share in 2021 to 51 cents a share today. And a 14% dividend isn't even the highest that you can get from BDC stocks, but this one is safer than the others you'll find and has that growth to put more cash in your pocket over time. Now, if you are going to be investing in this, a great resource for researching these high-yield business development corporations is the Raymond James Weekly BDC Report with some great charts on your returns and yields. But the best tool here is if you scroll down here, this weighted yield. This shows the average interest rate the company collects on its portfolio of loans. Comparing that to the dividend yields gives you a good idea of dividend safety and the potential for growth. For example, Trinity Capital is collecting a 16.1% yield on its portfolio of investments, but only paying out that 14% as a dividend, leaving room for growth or to protect the cash payout if loan defaults increase. You can't say that for all the BDCs here, so it is important to check that yield gap before you invest. Here again though, you're going to notice that Trinity only pays its dividend on a quarterly basis. I'm going to show you how to get an even higher cash yield on those off months with our next strategy. That's because these next two strategies are going to turn any stock into a passive income machine and convert your quarterly paying dividend stocks into monthly payers. I'm going to highlight the covered call position strategy first, showing you how to create that income from any stock, then combine it with another strategy for even higher cash flow. We've talked about that covered call strategy on the channel before, and it's one of my favorites for not only creating the cash flow from any stock, but also lowering your risk. For example, Apple is a great company and a stock you can hold forever, but that 0.4% dividend just ain't paying the bills. But if we go here to the options available on Apple and change the dates for when those options expire, we can see the dates for every month here. So this is going to be a strategy you can use every single month to create that passive income on your stocks. We're going to use the January options, which are about a month out from when I'm recording this. And if we scroll down through these call options, there are two columns you want to watch here: that strike price and the last price. Remember, a call option gives an investor the right to buy that stock for that strike price at any time now until the option expires. We're not buying though here. We're using these options to create that cash flow. By selling a call option on a stock we own, we can collect that last price in cash right now. And you can see we can agree to sell our shares for Apple for lots of prices, but at different premiums. An investor paying us for the right to buy Apple at say $250 a share, just under where it's trading now, is going to pay a lot more than if he were buying a call option to buy at $300 a share. Now, when I'm using this strategy, I like to find the strike price that's about 5% above the current stock price. That gives me some upside return left in the stock before that call buyer is going to buy the shares from me, but still a decent cash flow. So here, a 5% bump in the shares of Apple would be about $264 a share, or close to that $265 strike price. So looking at this table, we see investors are offering a premium of $1.52 a share to buy that option. So I would collect that amount now, that $1.52 in cash, selling a call option at a $265 strike on my shares of Apple. And you can see that amounts to a monthly dividend of about 0.6% yield, or more than 7% a year. Not only do we get that 5% upside return potential over the next month, but also a 7% annualized cash flow. You can use this on non-dividend paying stocks or even on dividend stocks in those off months to turn them into monthly payers. I'm going to show you next how to create that cash flow without even owning the stock, but I know all this options investing jargon can sound like a foreign language. Options investing can not only help you lower your risk in investments, but also boost your returns and create that cash flow. But it took me years to understand how to do it right. That's why I'm relaunching my Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use them, and how to set them up, including real-world examples with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly what to expect. Right now, I'm relaunching the course at a 38% discount. Save $150 off, but only for the next 3 days. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much money you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code in the link I'll leave in the description below, so look for that link or just scan the QR code here. Another option strategy here gives you the opportunity to increase your cash flow even higher and works perfectly with that covered call. We're again here in the options for Apple and the January expiration, but here we're using put options instead of calls. Remember, these put options give the buyer the right to sell the stock for that set price. Again, we're not buying though, we're selling these options and collecting that money. And since we wouldn't mind picking up more shares of Apple, we're going to use that strike price just under the current. So here are the $250 strike put options. One of the best parts of this strategy, besides the cash flow that I'm going to show you next, is that it gets the shares at a discount. By selling these put options, I'm agreeing to buy the shares for $250 each from now until mid-January, but that $250 would be a 1.1% discount from where the stock is right now. So buying those puts, the other investor is going to pay me $3.55 a share right now, instant cash flow. I'm going to hold enough cash in my account to buy the stock at $250 each, just in case I need to do that, but that $3.55 collected turns out to be a 1.4% yield on that amount, and that's in just 1 month. On an annualized basis, it would be well over a 17% dividend yield. What does all this mean? If shares of Apple stay above $250 through the option expiration next month, nothing else happens. I keep the $3.55 a share for that 1.4% monthly dividend. If shares of Apple do fall under $250 each in that time, I buy the shares for that price and also keep the $3.55. For a stock I wanted to buy anyway, it's a great way to lower your cost and collect that big cash yield. Our next passive income stock is the highest dividend on the list from the Simplify Volatility Premium ETF, ticker SVOL, and its 16.3% yield. Now, this isn't the dividend growth stock we saw from IIPR, but it is a monthly cash flow with an ex-dividend date in the last week of the month, which means you're going to get paid about mid-month. Now, this fund strategy is different from the stocks or stock funds we usually talk about on the channel, so I want to explain it a little. Volatility is just how much the market or a stock moves up or down in a given period, a gauge of stock market craziness. The Volatility Index, or the VIX, is the market's expectation for volatility over the next month, so how crazy investors believe stock prices will be. And while you can't invest directly in the Volatility Index, you can invest indirectly through futures, options, and ETFs, betting whether that actual volatility is going to be higher or lower than expected. But then here, the SVOL isn't really making a directional bet. It's simply saying that market expectations for volatility are typically higher than the actuality. Shorting those expectations, so selling those future contracts against the VIX, is a way to capture that fear premium in the market. And this strategy is backed up by research, testing VIX futures shorting from 2005 through 2015, rolling the short contract over each month, was profitable in 8 of the 11 years, with an average monthly return of 0.7%. and a total return of 118% over that period. But then the biggest selling point for me is that this is a totally different asset class. That premium from shorting the volatility index is reliable and robust, and the VIX has a historical negative correlation with stocks, so when stocks go up, the VIX typically goes down and vice versa. The correlation here is negative 0.84, which is very strong, and just means using a volatility strategy along with your stock portfolio can be a great way to reduce risk along with that double-digit dividend yield that's gonna pay the bills. We've still got one of my favorite income investments next, one with a cash flow plus an upside return, but sometimes even a month is too long to wait for those dividends. That's why I put together this video in the corner. Click through and check out these 12 stocks that are gonna put cash in your pocket every single week. This next one is another real estate investment, but an easy one with EPR Properties, ticker EPR, a real estate investment trust, and its 7.5% dividend. As a real estate trust, EPR gets that same special tax break that you see in BDCs, so these REITs are an easy way to invest in real estate, and you get a high dividend payment. The company owns almost 360 properties in 44 states and Canada, worth over $6.7 billion, and leased out to 200 tenants. It's well diversified across entertainment types, though theaters are about 39% of the portfolio, and has weighed on the stock over the last 5 years. EPR's business is built on the growing consumer spending for experiences, the things we do that create those memories. Americans, especially millennials, are spending more on these experiential outings rather than on things, with the market reaching a $1.6 trillion record. EPR has a high occupancy rate of 99% and low turnover on its leases, making for that long-term stable income. It might not be the highest yield in the group, but it is dependable and with a return upside. Get your $150 discount and see how to turn options investing into monthly cash flow with the complete options course, including Strategy Finder and Options Calculator, and that special coupon code in the link below. Or get on the notification list for arrived homes and monthly rental income. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.